well, thank you for joining us today. We are here with Bernard Lauper, the CEO of McCorkle Insurance Services, a insurance brokerage employee benefits firm based in Burlingame. And we are here in this incredible backdrop at Fort Point in San Francisco. Bernard has a very interesting story, and I think you guys are going to enjoy it. He worked his way up the ranks of McCorkle, took over as CEO, and then just recently sold the business to another strategic firm. So we're going to get a really unique perspective from Bernard today. He's going to tell us about the ups and downs of the deal, the challenges faced, and some of the challenges faced with deals posed to business owners. And he agreed to sit down and share with us all of this wonderful perspective. So Bernard, thank you for joining us. Bernard, you want to just tell us a little bit about what McCorkle is and what you guys do?
Well, first I'd say, as a native San Franciscan, we've got a nicer day in November than this.
Yeah, it's incredible.
So I actually joined the firm 22 years ago to the day I sold. And that certainly wasn't planned that way, but I had been working for a large national insurance company and really wanted to go out and do my own thing. And had the opportunity to actually go to McCorkle Insurance, where I knew I would have a chance to buy into the company and really go into an established situation with some infrastructure. I did I bought my first stock 3 years into being there, and about 10 years later I was the majority stockholder. By the time I sold, I owned roughly 90% of the company. It's an insurance broker that really dealt with all functional areas of insurance. We did everything from commercial insurance, or doing workers' compensation, directors and officers, insuring buildings for fire, flood, earthquake, liability in case someone slipped on the way out. We have a very robust employee benefits practice, insuring companies for their employee benefits. And really one of our great success stories was insuring the high net worth. So in Northern California, we insured approximately 24% of all the folks on the Forbes 400 list.
Oh wow, that's incredible.
We had great rides. So we were insuring them for their personal home, their auto, their umbrella, insuring their bazillion-dollar art collections, yachts, planes. So it was a lot of fun. I really had a great ride.
All right, that's great. Now you guys also are award winners, right? You got the healthiest places to work in the Bay Area.
Yeah, that's one of those things I was actually proudest about. So one of the things we do for our clients is risk management. And for most employers, after salaries, health insurance is the number one cost. And I felt that we were going to talk the talk, we had to walk the walk. So a number of years ago, we instituted a very robust wellness program, helping people with their diets, their exercise, their financial management, trying to reduce stress. And in my company, McCorkle, over the course of about 4 years, we were actually able to reduce our healthcare costs by a third.
That's incredible.
So we were able to take the practice that we learned, frankly, really taking our own employees, taking out to our clients.
Yeah, that's incredible. So congratulations, by the way. Yeah. That's good that you guys actually live that value in addition to providing as a service provider. So that's incredible. Okay, so quickly, just to make sure I understood. So you started in the ranks, you moved your way up, you bought your way in. Recently you're the majority shareholder. You own about 90% of it. But you weren't the founder of the business, right?
I was not the founder. I actually was all set to start my own company. I had I picked out rental space. I was looking at furniture, and I met the founder through a mutual friend. And I immediately see he had an established business. He had no succession plan, and I immediately became that succession plan. So I stepped into a ready-made situation.
That's great. So it was kind of business in a box, and you had one decision: either do it yourself or kind of go that path. And you said, "Hey, let's do that way." Because
I was literally within about a week of signing a lease.
Oh, that's incredible.
When I met this gentleman, and we immediately hit it off. He's a fabulous man. And we had a great partnership ever since.
Yeah, that's great. All right, well let's get to the juicy stuff.
Right.
Let's talk about why we're here. Let's talk about the deal. So tell us what went down. You sold the company. Who'd you sell it to? When did you sell it to?
Well, I'll start with the fact that I was not looking to sell.
And that's what I was going to say. And how did you find them? Did they find you?
Well, so last year we did a good job of doing a lot of things in the company, but one thing we didn't have a good plan for, or no plan for, was an exit strategy. And myself and my partner had a couple birthdays, and we were thinking, we should have a process, even if I just got hit by a bus or what have you. So I looked at two options. I looked at selling potentially coming to the employees, and I looked at
an ESOP,
something along those lines, or an outside acquisition. and immediately realized that in this day and age, at least in my business, the mechanics of selling to the employees really just wasn't, it didn't work for us.
Right.
One is I didn't have a large enough base of employees I thought would be really interested in running the company going forward. And then at the same time, frankly, the valuations on an internal sale versus an external sale were not favorable.
Right.
So
in terms of just lower
bottom line price,
valuation.
it was a substantially larger amount to sell an outside party.
That makes sense. Yeah.
And so we agreed that we would think about selling in maybe 3 to 5 years. And as luck would have it, I'm talking to a friend who actually had sold his company to a company called Strategies a week later. And twice a year he would ask me if I'd sell the company to him, and twice a year I'd say no. And it was almost Christmas, and he asked me the question, and I gave him the exact same answer, which was, John, no. But John's a great salesman. He goes, Bernard, that's the first time you've hesitated. And I went, John, I'm not for sale, but the only reason I hesitated was because literally a week ago, we decided we're going to sell the company, but not for at least 3 to 5 years. And that's all John needed to hear, right? He was on me, he was after me, and
so he heard the trigger.
He heard the trigger, and I came up with every possible reason why I wouldn't sell the company to him, and he just kept taking care of every objection. You'll fire all my employees. We'll promise to keep receptions. We'll keep HR. We'll keep accounting. Every time I had an objection, he took care of it.
Very persistent.
The best salesman I know. At the end of the day, it was such an attractive offer for my employees, for my clients, and for me and my partner. I just felt I could not say no.
And was he he was with Risk
Strategies? He was with Strategies, and he was actually one of the very first companies that Risk Strategies acquired.
Okay.
And he and I actually had tried to put a deal together for years, the two of us to merge here locally in the Bay Area. And unfortunately, we could just never quite make the mechanics work. But once he sold to Risk Strategies, I was hearing the stories from him. He was very happy. Risk Strategies had a very hands-off approach to letting their acquisitions run independently, which obviously was music to my ears. And he kept at it, and it finally sucked me in.
Yeah, but what a great case study there. One of the first companies that Risk Strategies bought, and he's still there, and he's still happy, and he's basically recruiting other companies.
A friend of mine saying, look, Bernard, I would do this all over again. And I remember, I was on the phone with him a lot, and one of the things that really stuck in my mind was like, Bernard, this is the least scariest deal you will ever do. I'm not saying it's not scary, but it's the least scariest deal you could possibly do.
Yeah, that's great.
Yeah.
So let's talk about the specifics. So Risk Strategies, Boston-based, acquired the business in July of this year, July of 2015.
Right.
They are a national firm, about 18 offices across the country. And at the time of acquisition, they were backed by a private equity firm, right?
That's correct, Kohlberg.
Kohlberg and Company, right?
Kohlberg had made a substantial investment in the company about 2.5 years prior to that. Typically, these private equity firms, as like to hold anywhere from, in this case, 3 to 7 years.
Right.
And happily for me, I took part of the deal in stock. 3 months after the deal closed, Kohlberg has sold their equity division to Kelso out of New York.
Well, we're going to come back to that because that's an interesting part of the story.
Yeah.
And so Risk Strategies, they were active in M&A. I was looking at their website. They acquired a bunch of smaller firms, so DeWitt & Stern, Crowe & Friedman, Benefit Development Group. So this was definitely part of the playbook. So they were a buy and build strategic / private equity backed business, right?
Correct.
Did that factor into anything on your thinking, or were you like, well, I already have a relationship with this guy at the company. We have a good relationship. If I'm going to sell, I'm comfortable selling it to him. And the fact that they're backed by private equity doesn't really matter to me.
It was a plus. The biggest things for me were the fact that I knew this gentleman, John O'Neill, the local gentleman I talked about. I also knew the CEO at Risk Strategies. So over the years, I had a chance to meet him and get to know him a little bit. And at the end of the day, I felt very, very good about the cultures. No two cultures are the same.
Right.
But our culture and their culture were probably as close as you were going to get. And with the fact that I knew they were going to take care of my folks, and the fact that I felt I was getting a very fair price, I never talked to anyone else. I just felt like it was the least scariest deal I was ever going to do, and it just seemed to be like the best possible fit I could get.
Great.
And at the end of the day, I felt like I could look at my employees, I could look at my clients, I could look at people who are saying, you know what, this is a good deal for everybody.
Yeah. Good. All right. Well, let's get into it. Right. What were some of the challenges that you encountered when you're going through the deal? things that you thought you knew going into it, but probably changed when you start getting into it?
Well, let me start with the fact that people usually want to hear about my mistakes, not the things that I did right. We did a lot of things right with the company, obviously a lot more than wrong, but the single biggest mistake, which relates to selling the company that I made, and I think a lot of business owners do, is we had a lot of plans. We were pretty good at planning. The one plan we didn't have is how we were going to get out of the business. We never really had an exit strategy.
Right.
It was always, and I've always told people I'm going to work to 100, which I absolutely mean. And frankly, I was always walking around saying I'd never sell the business. So I had no exit strategy.
Right.
And if I had an exit strategy, not that I didn't do well. I mean, I did very well, but I would have probably done all that much better if I had an exit strategy. So there's a book that I read, unfortunately, after I was involved in the sales process, by Bo Burlingham, called Finish Big.
Right. Yeah.
I think you've read it, right?
Yes, I know Bo Burlingham. I'm familiar with his work.
He's a great guy. I had a chance a couple times to meet with him, talk to him. If I had kids who were coming to me and saying, "Hey, Dad, we want to start up a company," I'd say, "Great, guys, I'll loan you the money, but not until you read the book, you write a business plan, and I want to understand how you're going to get out of the business." Because I fundamentally, I think we would have ran the business very differently on a day-to-day basis if we had read that book.
So that's interesting. So, but you gave that advice to your kids.
If I had kids,
if you had kids, you would give them that advice. I got you. Okay.
You read the book, and then I'll give you the money.
So, in thinking in hindsight, that's kind of what you would have thought of, potentially. Of how you would potentially approach an exit strategy for the business.
Absolutely. I would say day one, you have to know how you're getting out. Right. That's got to be the first thing you plan for. And I would say that the problems we had in the sales process all related back to the fact that we didn't have a plan. So here is a company that was not looking to sell. And our financials were in great shape, but they hadn't been built to be sold. I'd spent a lot of money on stuff that, frankly, I wouldn't have spent the money on if I was thinking I was going to sell it then.
So built to sell. That's fascinating. So I got you this book, Built to Sell, for you. Great book. We can come back to it later. But we talked about this beforehand, and it's the Bo Burlingham writes the forward to that. So that's yours when you build your next company, you sell it.
Sounds like a deal.
So let's talk about, number one, build the company to sell. That's kind of one tip, a piece of advice that you give to business owners. Absolutely.
You really have to be thinking about that each and every day.
Okay. And let's talk about some of the other challenges that you encountered.
In hindsight, and once again going back to Built to Sell and the Bo Burlingham book, once this process started, I had to get a team together because I didn't have a team. I had to go find the right consultant. I had to go find the right attorney. I had to go find the right CPA to help.
And you're saying team from the perspective of helping you with the transaction.
Absolutely.
Gotcha. Okay.
Right. So, once again, if I'd been doing this all along, I would have had that team in place, but I didn't. So I had to scramble to go find these individuals. And I think, in hindsight, I think we did a good job of finding the right people to help us with the process. But if I'd been doing this properly, I would have had that team in place. And Rich, I think that also brings up one of the other huge mistakes I made in running the business was consultants, professionals. I was the classic business person where I was being penny wise, pound foolish.
Right.
I didn't want to spend the money to go ask a consultant, an attorney, a CPA for the advice when I should have. I should have been talking to a lot more of these guys, paying their hourly rate or the consulting fee, right, so I get the right advice and run the company properly.
And you're talking about from the perspective of the transaction or just in general?
In general. I think I had done that earlier on. By the time I got into the transaction, things would have been a lot smoother.
You would have had the ecosystem in place and the relationships in place, and they would have understood your business better and all that, right?
I've been more buttoned up. One example is I was a C corporation, and we had figured out 4 or 5 years in advance that we should be converting from C to S, which we were in the process of, but not to go into all the tax complications. But
the built-in tax gain if you sell after a C to S.
You got it, but I should have done that 10 years ago.
Exactly, the 10-year waiting period.
10-year waiting period, right? If I had been talking and doing this properly, that would not have been an issue.
Okay. So number two, if you would approach it differently, you'd say, let's again going back to the built to sell mindset. Let's think about, in 5 years or 10 years time from now, who would I need on a team perspective? And let's start incubating those relationships. Now, it doesn't mean we need to go out and hire everybody and start burning through cash, but let's just start building those relationships, putting them in place so when we need them, they're there.
Absolutely. I'd be talking to these consultants, people now, help me build the company so that when it's time to sell, the valuation is maximized.
Exactly right.
And the best analogy I can think of is a doctor situation. Right, I actually had knee surgery about 3 years ago, and came to find out that obviously I need an orthopedic surgeon, but there are doctors who specialize in just doing right knees versus left knees. And I want to make sure in my situation I have the guy doing the right knee.
Right.
So I would say you got to do the same for your consultants, or lawyers, or CPAs, and I would, like, every 3-4 years, I would bring in a whole new set of consultants to review what's being done, to make sure I'm getting the right advice.
All right. No, that's great. That's great feedback. So let's talk about the deal. We talked before, and you made a very interesting comment to me, which resonated with me, which was when a lot of people think about doing a deal, they think it's a marathon. But you made an interesting comment. You said, what did you say?
Like most people, I thought that doing a sale was a marathon. And it wasn't until after the sale I realized it's not a marathon, it's an Ironman triathlon.
I love that.
And the reason I say that is because for me, the getting to letter of intent was the swim. The closing the deal was the bike run.
Right.
And now that I'm in the earn-out period, which in my case is 3 years,
and
right?
Now you're in the run.
Now I'm in the run. And I think I was the classic entrepreneur, businessman. Okay, I just got to get this deal closed, and everything will change, and I can relax a little bit.
Yeah. Oh, it's a fascinating comment, because I've done a few deals, and I've been doing this for a little bit, and I think that's one of the biggest challenges that a lot of people don't realize is that doing a deal isn't kind of a get in, get out thing. It's very far from that, and there's a ton of ups and downs, and basically like an emotional roller coaster.
Oh, well, I could spend 20 minutes talking to you about my emotional ups and downs through the sales process. I consider myself a relatively even-keeled person. I experienced every emotion known to man in the course of an hour sometimes. I had the highest highs and the lowest lows, and I was literally bouncing all over the emotional map. I couldn't sleep.
Yeah.
I'm usually a very heavy, good sleeper, and I would wake up in the middle of the night thinking, oh my God, what are they going to do with so-and-so person?
Right.
Or I distinctly remember waking up one night because I was dreaming about being at a cocktail party, and someone asked me, what do you do? And I'm not usually at a loss for words, and I was stumped. I didn't know how to answer the question, and it woke me up.
Right, yeah.
Right, so I think folks going through the sales process dramatically underestimate how tied they are to their company and what an emotional roller coaster they were going to be in for.
So just on that point, though, so what were some of the things that you were concerned with regards to the transaction? And not talking about the mechanical stuff, but maybe some of the softer side, the qualitative side of things.
Well, I was concerned about my folks, my people. Yes, they promised that they weren't going to fire anyone, but would this work out? Would I lose people? I'd walked around for 20 years saying I would never sell the company.
Right.
Right. So here I felt like a liar.
Yeah.
Right. That was I felt that was emotionally costly. And point blank, I was stressing out about me. I was used to being king.
Right.
And being king is good.
Yeah.
Right. And all of a sudden it's like, hey, I'm not going to be the guy.
Yeah. Well,
right?
That's a great point, though. So, and how was that? And that's actually, because it's interesting. I've been through deals where you did have, the proverbial, king, the leader of the organization, the guy who called all the shots, and then making that transition to being owned by a much larger company where you didn't have anybody to report to, but now you're kind of just a small piece of this much larger business. How was that transition?
Very tough. It's been 4 months now, and I think I'm just about starting to get out of it. But about 6 weeks into after the deal closed, we actually merged offices. Mm-hmm. And I went from having a really large office with a great view to having a standard office with no view. And I got to the new office, and I saw my new office, and point blank, I blew a gasket. I walked over to the managing director, and I was PO'd. And I remember going, if you were trying to send a message that I'm no longer the guy, you did a great job. And the response was like, since when have you cared about an office? And it was like, it's been tough. I also remember the first time I was reading a contract and I was getting ready to sign it, and it dawned on me, wait a minute, this is a lot of money. do I have the authority to sign this?
Yeah, right.
And I literally was like, I had like this, devil angel, and the angel saying, you should call the Boston office, ask the CEO if it's okay to sign this. And the devil was like, screw that noise. You're still a man. You can sign it.
Yeah.
And at the end of the day, I thought about it and said, you know what? I'll call Boston because I don't want this to be my first mulligan.
Yeah.
And I think they're going to say yes. But I was tormented about having the thought.
Yeah.
Having
Well,
the call.
it's a dramatically different mindset where you're the leader and owner of an organization for a decade plus, and now all of a sudden, day two after the transaction, you basically have to change your mindset in terms of where you fit into that organization. I would bet that a lot of business owners that are going through a transaction or selling to a strategic, that they are going to counter the exact same thing. So it's something very important to, and I'm not sure how you prepare for it, but it's just something you need to be aware of, and prepare yourself emotionally and psychologically that things are going to change, right? Things are going to change.
You're going to have to learn how to check your ego at the door.
Right.
I got to tell you, the first time an employee told me that, basically, we're just a regular employee, I don't have to do this for you, was, in my case, devastating. I went back in my office and was looking at my room for days. And I will tell your listeners that you can prepare for it. Until it happens, you have just no idea of what kind of magnitude this will have. And for me, I can tell you, I never woke up once worried about the price of the business. It was all the emotional stuff. And the emotional stuff for me was even tougher after the sale.
Right, yeah. So, any other kind of big takeaways that we can give to our listeners in terms of, challenges that they may face when selling a business, things that you wish you'd done differently?
Well, I'm going to reiterate the part about
the build to sell.
Build to sell. Make sure you're working with the right consultants. Challenge those consultants with some other consultants on a regular, like every 3, 4, every 5 years. And then I would also challenge you to really think bigger. So, in my case, we ran the company profitably the entire 22 years I was there. We never had a down year. Revenue grew, the profits grew. We never carried any debt. And the one regret I'm now having after 4 months having a chance to think about this is I wish I had thought bigger.
Right.
And there's no reason. I love my new CEO. He's a great guy. We could have done what he is doing.
Right.
Right. But we didn't think that big.
So when you're saying thinking bigger, you're thinking, well, let's not potentially be the seller. Let's potentially be the buyer, because at the end of the day, I could see us doing that.
Absolutely. Now that we're involved in this and we've kind of gone through it, I realize what a great company we had when we were running, and there's no reason we could have taken that platform and made it a lot bigger nationally. The issue was I just wasn't thinking about it.
Yeah.
And I wish someone had challenged me to say, hey, you guys are doing a good thing. Why aren't you out there acquiring other companies and making this thing bigger and better?
Well, it's a fascinating thought, right? Because it's challenge the way you think about your business, challenge your assumptions. You don't need to sell your business. You can potentially be the buyer, right? So just thinking bigger and really thinking about how you can, be a bigger business, and be an acquirer and growth through acquisitions, right? And I bet a lot of the audience listeners who have mid-market companies who never even thought of the idea, that's not even in the realm of possible. How can I go buy a business?
In our case, we were actually growing the business organically at a pretty good clip, but our business is consolidating so quickly that really the only way to stay competitive long-term was to go out and acquire. And I knew that, but I didn't act on it. And so if I was challenging your listeners, I'd say take a good look at your business, but I will bet, as we all know, the world's consolidating, right? I would tell you that if you're not out acquiring, you're going to get acquired.
Right. Yeah, that's great. So let's fast forward 4 months into the transaction. Kelso comes along and says, I'm going to buy Risk Strategies. How was that transition? Was that something that was a total surprise? And did that impact the way you are thinking about things now?
So, it was a very happy situation for myself because I took part of the deal in stock.
Right.
Right. So to me, it's like woohoo! It was not a complete shock. There were some situations during the due diligence process where things kind of fell off track on their end, and I remember making the comment to some of my internal folks at the time that they've either got another really big deal going or they're looking to sell. And after the deal closed, they were asking me for some information. Now, wait a minute, this is the kind of information that my clients ask me for when they're getting ready to sell.
Right.
So I had an inkling of that. In working the process, I had a chance to look at, obviously the stock price and the stock history and how they valued it. And I remember thinking to myself, gosh, this looks like a pretty good deal.
Yeah.
So I wanted stock.
Right.
I took stock, and of course I was thrilled to hear that when they sold, when Kohlberg sold Kelso, that there was it was a huge upside. And frankly, the return I'd hoped to get in 3 to 5 years, I got in 3 months.
Yeah.
So I'm happy.
That's icing on the cake.
And the other thing I'm very happy about, I'm very excited about the future prospects. Kohlberg had committed about $100 million to risk strategies, and they'd spent roughly about 75% of that in about a 2.5-year period.
Just a war chest to do acquisitions.
War chest. Kelso's at the table now and has a $250 million war chest to making available. And I expect really big things out of the company over the next 3 to 5 years.
Yeah, it's exciting. It really is. All right. Well, this has been fantastic. A very interesting perspective of a mid-market company sells to private equity, a corporate which is backed by a private equity firm, which then 3 months later sold to another private equity firm. So, a very unique and interesting perspective. Thank you for sharing your stories and your perspective today. Just to recap for our listeners, if we had to think about the big takeaways that everyone can kind of go back and think about in their business, are number one, I heard was the biggest thing was think about how you can build your company to sell, right? There you go, yeah, built to sell. How can you structure your business? How can you think about it? Because when time does come to sell, and if you haven't thought about it, you're probably going to be caught off guard.
Absolutely.
And you're going to be playing catch up, and you're probably not going to capture the value that you thought you would capture. And you're basically maybe leaving some chips on the table, right?
Correct.
So maybe that's number one. And as part of that, I think everything that we talked about maybe just kind of funneled down from that. So for instance, building the relationships with the key people that are going to help you achieve your goals if you potentially sell your business. And even if you don't sell your business, they can still potentially help you achieve your growth goals and your corporate goals. And then maybe number three, a big takeaway was think bigger, right? Think strategic. You don't necessarily need to be the seller. It all depends on what your goals are. But don't box yourself into thinking that, hey, maybe I'm going to build a company and then I'm going to sell it. Maybe challenge the way you think about some of your assumptions and say, well, couldn't I be the buyer? Couldn't I do that? And did I miss it? Did I miss anything?
No, I think it sounds like you've done this before.
A little bit, but what a fascinating perspective. Yeah. So this has been awesome, Bernard. Thank you so much. Bernard Lauper, CEO of McCorkle Insurance Company. We wish you all the best, and thank you so much for sharing your story with us today.
Thanks for the opportunity.
Thank you.
Bye.